Okay, and so we're live. Thank you so much, everybody. If you were just joining my live stream with Larry, you'll be coming on board here. You'll be redirected here. So this is Cyberbulls, and we're going to be talking about what happened in the earnings call yesterday. We're going to talk about what we think is happening to the stock. Quite a number of people are fairly negative. They are starting to feel like the stock is going to be on a free fall, at least in the short term. And some people don't think that there's anything to stop its fall for the next year. The whole of 2024. I have different opinions. I'm sure some of us here also will walk us through that. Welcome, everybody. What's your immediate thoughts on all this, Alexandra?
Hi, Herbert. Hi, Larry. Hi, Jeff. Good to see you again. And
yeah.
I'm muted. No, I shouldn't be muted, right? Good.
You're good. No, you're good. You're good.
Thank you. Well, yesterday was painful. I mean, actually, through the call, I was all good, but I found in the aftermath on X, people were just brutal. I had my moment where I thought, stop this. Good night's sleep this morning, woke up and said, that's it. I have cash that I was waiting to invest, so I threw the first 30,000 at it now. There's more to come, so I'm waiting for another 30 and another 20 after that. So waiting for all that, but really comfortable with what I bought today. So let me resume what I got out of yesterday. There was lots of goods. The biggest good was actually how they were able to manage costs of goods sold. That for me is just astonishing. And some people read into it that was the last cost of goods sold. Well, yes, for the current way of producing, but we're also going into a complete new manufacturing revolution that will have even further price cuts in cost of goods sold. So that was great. Auto gross margin stabilized, is even slightly up. Operating margin stabilized, slightly up. Free cash flow. I didn't expect that much of a free cash flow. We did more than 43% of the free cash flow just in Q4 of whole of 2023. So we're ending the year with close to 100 billion of sales, 96 billion, 4.4 billion of free cash flow, 29 billion of cash or equivalents on hand. Absolutely great. Still stable research and development, but what they did guide is that the capex is going up now to 10 billion, which is much more than I had anticipated, and they said will be 10 billion plus, mostly for AI and research and development. So Larry and I had this discussion before. I still hope they would do a capital raise. They're saying they have enough to all do that with their own financing. Well, be it. I just want them to throw as much in that field as possible, but stay efficient, right? And we know how lean and mean they are. So liked all that, liked the V12 rollout, liked what Elon said, that now AI is for the first time not only path finding and vehicle control, but actually object perception. So that's a major step, and it's a major step for bots as well. He reiterated a couple of times, Tesla is the most efficient company for IE inference. I mean, for the non-English speaker like me, it's important to understand what inference means. It's using observation and background to get to the logical conclusion. And that is just so rare, and there are not many players in that field, and certainly Tesla is one of the top players. Then what else did I find good? Well, everything talking about the new line, how they're improving manufacturing technology, and how that is going to be the most important competitive characteristic of Tesla. The next generation vehicle confirmed for second half of 2025. Now let's just hope the timing is that, with starting in Texas, waiting for the Texas line to be laid out before finishing Mexico, which fair enough. I would have wished it would go a bit quicker, but they're prudent there. And then a third outside of North America plan doing it announced end of 2024. We know that both Berlin and Shanghai are waiting for those, so we'll see which one gets it. He also talked about bot deliveries to clients in 2025, like that. He clarified why he needs those 25%. I'm sure we're getting to that in a second, because I want to talk about those proxy advisory firms and the bastards they are. Sorry about my English. Then 4680 production line. Drew explained that they're actually for the first time ahead of the ramp with finished cell inventory. Now in cost reduction and production ramp phase. So we've moved on. One is an assembly line, one is a production line, one is an assembly line, 2 test lines, and 4 more added in Q3 of this year. They broke ground in Nevada. they confirmed 250,000 Cybertrucks as delivery goals in North America. Now let's get to the not so good. I found Vaibhav Taneja, the CFO. Oh, I'm prepared. I worked on this whole thing all night because I wanted to confirm to myself that I needed to invest this money. And am I ready? And I am so ready. So Vaibhav Taneja sort of missed the goal with me. What he said, when I see it in writing, is good. I mean, on the advertising budget, I found him a bit flip-floppy, but he's not the best communicator. And I mean, I love Elon. I digest Elon stuff a couple of times before I'm really there. I just wish we would have a good CFO communicator. So I'm not sure whether he will step up or whether we need another person there. I'm a little bit uneasy there. Just want to say what I feel. Another thing, I really feel a bit manipulative, and that always gets my alert bells ringing, is suddenly we're not talking about Tesla being bigger than Apple and Aramco combined, but now we're at the most valuable company in the world. Now, I know where this is coming from. Elon and the board are obviously putting in place this comp plan and putting in milestones. I just felt that was a little bit, what happened to that old goal of Apple and Aramco combined? And then him saying for the first time he sees that path to the most valuable company. Well, I can find you 10 quotes in past earning calls where he saw the path already. So this wasn't the first. I don't understand why this suddenly was sort of manipulated, is the only word I've had. With the, and I'm sure Larry can explain that better to us, with that recognition of that old tax write-up, whatever it was, the whole tax rates now go up. It is what it is. The whole digital ad campaign investment in 2023, I found that was still a little bit weak. Weak is probably the best word I find. I talked about the Mexico plan being slow. And now there are a couple of, so that was the not so good. And then there are a couple of bads. The bads were only 4, but they are what they are. The FSD take rate is obviously not improving. And I mean, obviously that is linked to V12 not being where it is yet. And I hope with the rollout in the next couple of weeks, we'll get there. But I think they have to seriously rethink pricing on FSD. We've had this discussion before. I really wish it comes down, or at least a couple of months free for people to test it, whatever. Didn't like it. A real hiccup for me was that there's no FSD licensing deal anymore on the horizon, and that it only came out because one of the analysts really triggered the question until Elon had to say it. Remember 2 earning calls ago, it was like, oh, we're in early talks with an OEM. We got all excited. And if that question wasn't posed, we wouldn't even know that there's nothing on the horizon anymore. So I just didn't like that. And then the guidance missing. I mean, again, it's not a huge deal for me, but obviously for Wall Street it is. Gave me a good buying opportunity. And then the 4th last point in the bad colony is that they seemed like little boys surprised that competitors are stealing their information from Battery Day and AI Day. I mean, come on, get real. This is the most competitive industry we're in. And you're now just waking up seeing that competitors are stealing from your presentations. I mean, where are we? So that was it. I mean, the good by far outweighed the bad. And you know, when I wrote it down this morning, I just said, stop worrying, stop being annoyed. And all the points I brought up in the not so good and bad column are stuff that can be improved. Just have to be realistic about it. Thank you for letting me have my rant.
Do you want to announce to folks what you ended up doing with the stock this morning?
Oh, I did. So I bought $30,000 at 182 something. And like I said, I have a second tranche of 30,000 waiting and a third one of 20,000 that's coming in a couple of weeks. So I'm
you timed it correctly today.
Yeah, well, it went a little bit lower, but I was good. I'm not bad. I'm very happy about that purchase. It, you know, once I'm through with thinking it through, I'm a bit of, I've tried to be not too spontaneous, and so once I was through, I was like, let's go for it.
So I have to ask you, Alexandra. I mean, okay, so you did a fantastic job. I mean, I've never heard this great summary of all the pros and cons. Mine was like a list of 5 and a list of 4. Yours was like really complete. But everybody is saying, I mean, I just interviewed Pierre Ferragu. He's the only person who actually believes that the stock is going to rise the second half of this year because Jeff, you got to watch his video that I just did with Pierre. I'll drop it on Saturday or Sunday. He talks about what you're talking about, cost of goods falling 3% each quarter, gross margins could actually improve. And as it improves every quarter, the street will see it. Now, but Alexandra, I mean, you bought today when everybody's saying that it's going to be flat for at least 2024. I just finished a show with Larry. Larry's saying 2024 flat, could fall even further. Tell me why you thought today was good. Of course, you should buy when it's down, but
Exactly.
down for a whole year?
I mean,
down for a whole year?
yeah. I mean, I bought over the last 4 years regularly. I had the biggest chunk in immediately when I went in March 2020. That's still good. I'm still happy about that investment. But then I continued buying as I had money. So I never looked really at the stock price. I just, I had this very long-term view on it and just continued buying. And so I bought some over 400, right? If you buy some after 400, the pain. And then I didn't buy a lot at the second half of last year, just because a lot of expenses with my kids, installing one at New York. I mean, there was so much to be paid. Don't make 5 kids, right? Should tell you all of that, but that's another story.
That's your mistake right there. That's
exactly.
That's your decision.
But now, beginning of this year, I was ready again. I had money, and I've been waiting. And we've been talking in the DM chat for a while. It was a good moment to go in and whatever. And I just felt, I was actually ready to buy a 260 a couple of weeks ago. I was ready to buy a 220. So when you then see 180, you feel comfortable doing that because you didn't go in at earlier levels in the recent week. So that gave me enough ground. Can it go down to 150? Of course it can. I mean, if I would be the one pushing the button and that would be the lowest point, people would know and I would be much richer than I am. But I feel good purchasing this stock at 180 given my time horizon, which is still many, many years to go. I mean, I don't need this money, at least not in 2030 and probably not in 10 years.
Okay, I want to bring Jeff up here because Jeff, you called it dead on. I'm going to show this chart here. Sorry, guys, I'm jumping around here, but basically your cost of good analysis was dead on, and you're one of the few voices that was actually, I mean, I got to give Larry also said something similar, but separately, but you have been dead on here. So this is cost of goods, shocked everybody. I think it fell by $1,000. They did prove your number that there's going to be a $3,000, a 3% reduction every quarter. So tell me what you're thinking about not only what do you expect for margins and cost of goods and so forth for the next year, but also the stock, if you don't mind. I know you don't want to talk about the stock necessarily, but let me know what you're thinking.
Yeah, I kind of you invest in the business and you trade the stock. But yeah, just I'll start like closer to home with COGS. So the 3.5% reduction quarter on quarter actually exceeds like what most companies are actually able to do unless there's some special event. But if you look at it over 4 quarters, which is what you're really supposed to do over 8 quarters, they have a pretty consistent track record of driving they have some 8 to 10% troughs that they've driven over an annualized time frame. And you look when there's interruptions, it's like, hey, we're bringing up Austin, hey, we're bringing up Berlin, which are huge net drags on COGS. But if you look at like how they design product, how they manufacture product, this is best in class performance. I just want to let people know, like, this is as good as it gets. I'm normally accustomed, like in the auto industry, something in the 1 to 2% range, and they delivered 3.5 this quarter. They're organized differently than other companies. They kind of work as a unit on cost structure functionally, meaning they'll get together all different functions and work on the drive unit, for example, and really drive that to a target. They've got targets that and a culture that comes down from the CEO on cost, and that it's hard to analyze that. If you're an analyst, it's hard to well, what do you put on that in terms of a multiple, or what does that mean? And so anyway, getting back to the COGS story, the prediction I had is that A, they would surprise, and B, that they would start to exceed the pricing reductions. When you look at the pricing reductions in aggregate, so like the pricing reduction that just happened in January, everybody looks at the gross numbers and sees 6% in Europe, but when you divide that, when you realize that that's 10 or 11% of their shipping volume in the quarter, and you realize it's 0.66% of MSRP, and you just saw them print 3.5% on COGS. So this is what I mean when I keep bringing up these examples. And now they've gotten through the factory shutdowns. They've gotten through a lot of the noise last year. And by the way, one of the things that actually helps them in this situation is that they move inventory through their system so quickly. So if Drew or Lars come up with an event-driven idea to take cost out, it goes in and out through that system very rapidly. You're talking about the lead time of the component, and you're talking about the some of the fastest process times to build a vehicle in the world. And then you've got only 15 days of inventory in the chain. So basically, they can move. That's one of the reasons that they can drive COGS lower more rapidly. Is that now one of the questions I continue to get is like, well, this gets increasingly more difficult. They're going to be able to do more. Yes, it gets more difficult. Yes, they're going to be able to do more. They are not at terminal COGS, in a 36,300, kind of gross aggregate. Maybe there's certain trims where they're going to be more difficult than others, but there's still plenty of room for them to go on COGS from here. And really, to me, all the way into the next generation, I think this is what's important. There's not going to be some quarter where unless there's some big issue with volumes or there's some big event, they should be able to continue to drive COGS down pretty continuously until they get to the next generation vehicle. Again, it's going to get increasingly difficult, but I do believe they're going to do that. What I can't predict is what are they going to do on the pricing side. Is by the fact that they didn't guide on that call on either the volume vector or the gross margin vector, and and the fact that they've reduced their price reduction campaign. This is what really irks me when analysts just say price cuts, price cuts, price cuts. Actually do the analysis and understand like what is the gross impact of that in the quarter, and then do the COGS next to it. It looks like they've really reduced the rate. They had price corrections in the first half of last year, and now we're just doing very, very small changes. So the question is that what they're going to continue to do? And some of the verbiage I would have thought could have been appropriate on the call. Again, I'm not in Tesla management. I'm not saying I can do their job any better. But one of the comments, if it's true, what is one of the comments like, look, we're going to continue to drive pricing lower to get our product out to more people. However, we're going to do this in commensurate with our COGS reduction program. We're the best in the world at doing this, and we're going to continue driving that as a priority. I would have loved to hear them say that. I loved Alexander. We can talk more about COGS in a minute, but it's gonna continue going. It's not going to be at a perfect 3.5. Don't graph 3.5% for the next 7 quarters until they're building the 2020. That's not how it's going to work. There's going to be ups and there's going to be downs. There's really big opportunities with 4680. There's really big opportunities with underutilization in some of the gigafactories, and there's huge opportunity in forward leveraging the next programs and getting the current suppliers to do a little bit of a stretch with them until they get to the next set of programs. It's only next year. Very common for OEMs and suppliers to do that together. And Karn, who's one of the supply chain VPs, said that. Alexander, he actually said that on the earnings call, and I don't know if a lot of people caught that. I sure did. Just finally, I think Alexander had a really good kind of pros versus cons list. I agree with most of it from the call. Obviously, the good stuff was on COGS, gross margins beating. I'd just say in terms of, I'll come back to some of the good stuff, but really constructively, I don't agree with the no guide, but I understand it. If they were below the consensus 2.1xx and change in their guide, then that would have been the headline: Tesla guides below consensus. If they were within a couple percent of their gross margin guide, remember they guided for 20% gross margin last January, and they're getting just filleted for where they're at right now. Even though relative, they're still in pretty good shape and they're improving. But I can see why they didn't do it. But that's a problem. This is how Wall Street is reacting.
But Jeff, you had a banger post this morning, and you said, okay, they didn't guide, but this is what I would have said, and you could have said this instead of what they said. Tell us what you said.
Yeah, well, on pricing and gross margin, what I would have said is look, you know, we you saw what we just did in COGS in the prior quarter, probably the best in the tech industry, definitely the best in auto, best in tech industry. And going forward, we're going to continue to look at pricing to kind of expand our product, to more people, for more access. But we're going to do that more in commensurate with our COGS reduction program that we're very confident in. Again, knowing that there could be some variation. I think if they said something along those lines, then it could have been bounded a bit. That's difficult to do. I don't know if they're in a position to say that or not. But I would have also said, look, there's connections here. We've got forward leverage with our next products. We build the highest volume products in the world, the way we're organized as a team. But really, I would have focused on, look at the results we just delivered, sequential improvement in gross margins, and I would have kind of made a commentary around pricing and COGS, and more like we're on a path of connecting them a little bit more in the future. If that's true, if that's the case, that's how I would have said it.
Okay, and then I need you to answer this question. So this came out, and this adds up to 2.35 million cars. What can we take, since they did not give us a guidance for the year deliveries? What could we take from this chart?
What can we take from that chart is I've always recommended that, again, not trading advice, it's more of like following the company, is to follow what they do in capacity and not what they say. Sometimes they overcommit, sometimes they undercommit, and to really just follow what they do from a capacity perspective. And I would actually go do some double checks in the background. Some of these numbers are pretty solid. Like you're not going to add to the SNX in California, but the Shanghai number, we know they've actually built beyond that rate. So anyway, so there's definitely some movement here. It could even be higher. So the takeaways I have is, one is they're still running their CapEx, not all sites included. Some sites are better than others, but relatively high utilization, much higher than the rest of the auto industry, much higher than most industries. So I would take that capacity expansion from the 1.8 to 2 million run rate going up to 2.3 to 2.4. They didn't do that, because they like spending money and giving suppliers CapEx money. They did that because they think there's an opportunity that they may be using that. There may be scenarios in the marketplace where they use that. And this is what I'll kind of close on. If you have another question, what happens when you couple the best team in terms of COGS reduction and a declining interest rate environment? What happens when those two combine together? What happens to the gross margins on the other side of this? This is what I don't think analysts and some of the pundits are actually talking about. They're really kind of like, that hour of time on the call yesterday just really like burned them. And I understand why, but really what happens when you combine those? If you've believed the Fed dot plot, and if you believe there's some connection to people buying vehicles and how much they actually cost and what it costs to actually financing them, and even the access to financing, if you believe those are true, and you believe the COGS graph that we just put up, and who's in a better position, not only just in EV, but really in all of auto, but who's in a better position to grab all that? So,
wow, guys, if you're watching this, we've just heard some incredible recommendations, advice, analysis. Jeff Lutz, follow him on X at the Jeff Lutz. You got Alexander Mertz, Tesla Boomer Mama. I spent the whole hour just before this talking to Larry Goldberg. We went down lots of points that happened at the earnings call. Larry surprised me, guys. He's bullish and he's happy. Good mood. I don't know, Alexander, why did you tell me, Larry might not be in a good mood? He was in a great mood.
Are you in a great mood, Larry? Are you not going to tell me the stock's going to go lower?
Well, you trapped me there. I'm not.
I know you.
I'm not going to tell you the stock's not going to go lower. If anything, it could drift lower. So, I mean, I'm with you. This is the time to invest. I mean, I've kept a lot of dry powder this year. Well, I've always got dry powder because that's just how I am. I don't invest most of my money in the stock market. But if ever there's a time to invest, it's now. And I would not put it all in today. I think there's a lot of opportunity to dollar cost average over this coming year. The analysts give us so much breathing space. It's amazing. I do want to comment. I've said this on several shows that I've been on in the last 2 days. Jeff Luss is the GOAT. I mean, Jeff, you nailed it. Absolutely nailed it. I mean, you told us this was going to happen, and it happened. And there's very seldom we get this level of justification and this level of vindication. So amazing. I do want to add 1 or 2 points to what you just said. Yes, they're amazing in their supply chain, but I don't think their supply chain measures up to their control of costs in their operating expenses. They are the world's best operator, bar none. There is no company in the world that does this level of R&D. And by the way, they put all of their R&D into overhead. This level of R&D, this level of expansion, this level of operational excellence with this little money.
And so efficient, exactly. The efficiency, if you compare it to anything else, it's crazy.
Yeah. So Jeff, I would just add that, because that's a multiplier. When you get that level of excellence and you're able to deliver, that takes the value of that additional margin that you're able to earn, and it multiplies its impact.
And that's how the culture is coming from the CEO, because if it was just a supply chain team, you wouldn't have that Lars and Drew engagement. Like, Drew was like, I've got my list. We're going to be going boom, boom, boom. And Lars was like, there's plenty of room to go. So they have the engineering team jazzed up, which if you've been in supply chain, you've been in procurement, that's not always the easiest thing to do. And then your point on R&D efficiency, that just tells you that there's kind of a common connection point, and this culture is coming down from the CEO. So as macro conditions improve, there's a company that's going to be on the other side of this. I think it's going to be doing very well. I think there's going to be other companies that are going to grab bits and pieces, but you have to look at each one of them separately. But I think they're very positioned well. They're positioned really well from a cost structure perspective. I wish they can tell the story a little bit better, because it's actually maybe they don't want to tell the story, but it's actually quite impressive.
And they told an amazing story at the investor conference, because the interdependence between that management team was extraordinary. The level of confidence they had one with the other. I like to tell the story of a Monroe video from a year within the last year, where a guy took apart or analyzed a Cadillac. I think it was one of the new Cadillacs, EV model. It was an EV model, one of the new Cadillacs, and he opened the door. And this is a guy who really respected the tradition of Cadillacs, because you go back in the history of Cadillac, it's an incredible story. Anyway, he opens the door of this Cadillac, this brand new Cadillac, and we're looking at the seat. And then the seat is sitting on its pedestal, and it's all covered in the fabric of the leather or faux leather, whatever it is, of the seat, and it's got a wrinkle in it. And he says, you see, that's why it's no longer a Cadillac, because the engineers have been forced to use the fabric that the purchasing agent bought in bulk. And therefore, whether it's a Cadillac or it's a Chevy or whatever it is, they have to use that. And they wouldn't have wanted to use that. The contrast between that and when you get the engineers and the purchasing agents working hand in tandem, to really complement one another, it's like chalk and cheese. And so it's just amazing to me. So that's the one thing that really shone for me, and nobody talked about it. It's like that's expected of Tesla. It's just expected.
Yeah.
It's amazing. So that's one of the reasons I was so excited by it yesterday.
Yeah, and you couple that with their ability to volume leverage. Remember, there's 4 main SKUs, maybe now 5 main SKUs that they build, and very few variants under them. Or if you analyze a company like a BYD, I think Alexander took us through that with another gentleman a couple of weeks ago. There's 19 to 20 plus SKUs at the top end, at the top level, and then many sub SKUs below it. When you hear a company's volume, when you hear a company's volume and you say they ship 3 million of something, you got to divide it by the number of variants they're actually building, because that's their true physical leverage in the marketplace, in the supply base, not only inbound from suppliers, but actually pushing product outbound and the complexity involved with that. And it just kind of goes, this is why Tesla is able to put up that kind of cost performance. I wish the rest of like everything around it went better. I don't feel great about celebrating one thing or another. I mean, I wish kind of everything around it kind of came together, but I think it will, because this is fundamental and core to how they operate. This isn't changing. So when you're thinking about, I think about like investing in the business versus trading the stock, investing in a business that knows how to manage R&D efficiency, knows how to manage their cost structure, knows how to manage complexity in manufacturing, knows how to design factories, knows how to do all of these different things. So when they enter into something new, whether it's the truck category, whether it's humanoid robots, you know that they're coming from that platform of like wholeness and goodness as it relates to cost structure. And that will allow them to win. And that transfers into FSD. Their approach to FSD on the client side is the lowest cost approach in any vehicle that's attempting to doing self-driving. It kind of translates into everything that they're doing. So is it going to change the stock price today? No, but these are the kind of things that are kind of fundamental, to a core business.
Okay, so one of the main topics I want to ask you guys is, what will stop this stock fall? So I know that we just went through the earnings. We have lots of positives that we got out of it. We think that 2024 may be flat. You got Larry talking about, yes, it can fall. I think we all believe it will fall, but what could stop it? Because before this earnings call, people were saying, well, hey, yes, gross margins may be trough, but interest rates and macros can come up next year. We've got FSD, we've got bots. These things can happen. But now people are thinking, well, it's going to be a flat year for auto gross margins. And then they're saying that FSD sounds like it's coming out, but he doesn't have a license agreement coming. So things look like they were pushed off. Do you guys think anything could actually form a basis to stop its fall?
Yeah, of course. I mean, first of all, it's today's topic, right? You can't go on any channel or anything and don't hear Tesla. So now, this is the beat of today, but we're just entering earnings season. That's actually one thing I would like Tesla to consider. Is it always good to be the first one? Because everything amplifies with Tesla. Now, today we've heard that Hyundai also fears a difficult 2024 and all that, but all the others come afterwards. So the bad news always is covered first by Tesla. But anyway, that's another story. So the one element that will stop the bleeding is the fact that Tesla won't be the headline tomorrow or 2 days after, because just somebody else has had earnings out and they will talk about that. The second is that currently what happens is retail is replacing even more institutionals, right? I do believe there are institutionals who just don't see a path in the next, and there were so many price cuts on the institutional sides that they're, getting out of the stock and making room. Now, this is not huge because the biggest bulk of institutional investment in Tesla is index funds, and they're just holding. So that's it. But there are obviously players around it. We're going to do in a couple of weeks, middle of February, Herbert, when we have the names, the new short sellers. So there may be more short sellers now into the stock. Again, we'll see that. What else will stop the bleeding is if interest rates come down, just because Tesla is a sensitive stock to interest rates. So if the Fed does something in the next meeting next week, that may help, just the whole general mood. And then the fourth point, obviously, is some breakthrough. So if in a couple of weeks, version 12, and then afterwards, iterations of it are going out to the potential 400,000 cars in the United States and have a good reception, if they change pricing on FSD, if on that side, because I think that is the closest good news coming, that's gonna help the narrative.
Okay, thank you. Xander, do you have answers? Do you follow the stock quite closely?
Yeah, I think about potential for margin calls. So we got to buy the dip. That's what I think that unfortunately the technicals will dictate here, and if buyers aren't coming in until 150 because that's the number that they saw as the low, then that can cause an avalanche. But I'm not quite answering your question. So what can, I think interest rates is the right answer, and really if they announce something that's positive, although I heard a lot of good things on the call, but it's just no guidance means Wall Street's gonna sell first and ask questions later. And I think that there's a lot of cashing in happening in today and tomorrow. So really, I'd want to see what happens on Monday before I can kind of give any more speculation.
Okay. So I got a couple of other questions, and I don't know which one is first. You guys tell me, okay? One is this a story stock? So a lot of people are telling me, hey, it's an auto. It's all about numbers. You got to show me earnings. And if you don't show me earnings, and until the earnings go up, stock's going to be flat forever. But some others, like me, think that this is a story stock. This is a growth company, but it's not growing because of the auto. So now the reason why people are putting money in this and stock goes up is because of the stories that the potential for these outsized gains. And then the other topic we could talk about is Elon's State of the Nation that's coming up. He said he was going to do one after the earnings call. I think, Alexandra, you think it might happen Monday, Tuesday. What's going to happen there? Because one of the things I was really disappointed with was he did not talk about Tesla being a robotics AI company. He only mentioned it once when he was asked that question, and I really felt strongly that he needed to tell that story. So the two topics are connected together. So
he said it in the opening line. He said it in the opening line. And he also, this morning, I heard one of the Tesla bulls saying, oh my God, now we're suddenly an AI company. In 2020, because I was going yesterday through all the earnings call to find all the references to Dojo. I wanted to make sure people understand there was never any overpromise. Nobody ever thought this was, the thing ready now and suddenly it doesn't exist anymore. I just hate it when people do that. So I wanted to set the facts clear, went through all the earnings calls since 2019. And in the earnings call in 2020, the first line said, we are now an AI company. That's 4 years ago, right? So I mean, people coming up with these horrendous claims is just completely wrong. Now on the 10K, so the 10K is going to come out on Monday. I think usually it does. When they do on Wednesday, it comes out on Monday morning early. It's a long document to go through. We may know the shareholder meeting date, and we will have a lot of details. I mean, this is one of those documents. If you like going down in a rabbit hole, you've got it for a week. So, I mean, any obsessed Tesla investor who is, considerably invested, you have to read the 10Ks and 10Qs. I mean, I know initially this sounds like a mountain, but you have, and it's not that unreadable. People always feel like, oh my God, it's all this language legal. It's not. Once you get into it, most of it, it makes a lot of sense. So he said precisely, end of the year, Elon said, once the year is over, I'm going to do a speech for SpaceX. He did that. It was actually a very good, motivating speech. He was there in front of the SpaceX employees, recalled what they have been successful and the new plans. And he will do the same for Tesla once the 10K is out. Why after the 10K? Because then the blackout period is finished and now he can speak freely. We're now going into the next phase. So I tweeted that yesterday. I posted that yesterday. I'm still there. I posted that yesterday to him saying, so Elon, can we get some more details? No reaction yet. But I do believe that will come next week. May actually be good, right? I mean, I don't know, will he do an X space? Will he? But I don't know how he's going to do it. I imagine it's going to be a space. I hope he lets some of us ask questions. I would love it because they so despise and hate these earnings call with Wall Street, right? You can just feel that they don't want to be there, right? It's such a waste of their time. They feel like they have to explain stuff that are obvious and have to go through the whole stuff over and over again. And I think he's expressed that so often, he just so much more appreciates retail investors, feels they understand the company much better. They have a much longer horizon, whatever. And I feel this is a gift to us where, he can talk freely. It's not about ratios. It's about where we are, what's coming, and the longer vision. So I'm very much looking forward to that one. Yes.
Mm-hmm. Anybody else?
Yeah, just commenting on story stock, or what's the stock going to do next? The answer is nobody knows. That's the actual real answer. You can form a set of hypotheses around various milestones, and around market behavior, and around technicals, and around a number of different things. But I don't think anybody, here, or anybody I see in the comments, did anybody think that Tesla was going to go from $150 to $300 from May to July last year over 2 months? Anybody see that coming? By the way, their EPS was cut in half during that time period. So the people that are marching around with EPS flags and like there's a 1-to-1 correlation to that, that's not true. Their EPS cut in half throughout last year, and the stock more than doubled. So when you operate in a statistical world and you start looking at some of these things, like, yeah, you can try to draw conclusions. You can try to look at things. I see people on Twitter now, people that own large portfolios, talking about, well, if it's not going to stop here, it's going to go to 152 to 160. They don't know that. Nobody knows that. So I think what you have to do is you kind of have to understand the business versus the stock, what's your time horizon, and make decisions for yourself. Don't listen to me. I don't know where the stock's going to be tomorrow, but you can listen to informed opinions about aspects of the business, about what may be going on in the market. Alexander brought up a great point about interest rates. And then you can kind of form an opinion and you do what's right for you. But in terms of like, do I know where the stock's going to go tomorrow? I know it's not the greatest answer in the world, but I mean, the correlation of, is there anybody who can bring up here and says, yep, so it's going to go from here. Like, and I see people coming on, like trying to explain, like, what did the stock do yesterday versus today? Like, it's really difficult to do and understand those market dynamics. But just remember, Tesla EPS cut in half last year and the stock doubled. It did not break any norms. Nobody knew back in 2021 that we were going to 1,000 PE before we went to 1,000 PE. Nobody knew that was actually going to happen. Nobody knew that.
Thoughts on the state of the nation that's coming up?
I think, for the employee base and for the shareholders, I think it's very important to kind of, Elon said there's lots to look forward to in 2024 and beyond. Okay, well, it's maybe more difficult to do on an earnings call. Maybe articulate that vision with visuals, in front of the whole team about what is that? What do you see happening in 2024? You can't guarantee things, but what are you planning for and why? And maybe give us a little bit more insights in terms of progress they're making on things where we don't get like really regular progress updates, and whether that's FSD 12 or whether it's other things. Yeah, I mean, I think he's got to be very clear of like, employees, this is why you want to work here. This is why you want to build a career here, and this is the mission we're on. This is what we're trying to do. And oh, by the way, I tend to participate in things that become financially successful over various timeframes, and kind of articulate what that vision is. That's what I would be looking for.
So if I could add to that, Jeff, I think what would be really powerful is if he could give that kind of state of nation at a high level, and then have selected members of his management team, as he did at Investor Day, talk to their particular area. That was the most powerful. I mean, that Investor Day was so powerful, and a lot of people took some of the wrong takeaways from it. They didn't look at it as a strategic view. They thought it was going to happen the next day. But if you look at what they told us at Investor Day, and you look at what has happened subsequently, it has been, a roadmap that you could rely upon. And I think an update to that doesn't have to be an Investor Day 4-hour process. It could be, 25 minutes, 35 minutes. The key guys, Moravi, Drew, some of the
Zoo.
engineering guys, just fantastic quality people talking about what they see for the coming year. That would be so powerful, at least for me anyway. So,
Agree.
Yeah.
I want to ask this question to Xander. Xander, this is a great question from Gary Carson. So if Tesla's a story stock, the story is an old story that's been told quarterly. FSD, robotaxis, Dojo, Tesla bot. The audience is waiting for the dream to come true. And the other part of that, I think, and I'm going to put the words in, sorry, Gary, is that it needs to be something new. Otherwise, yes, it's a story stock, but it's the same story that's been told. Unless there's something new that pops up, stock's going to stay flat for the rest of the year. What's your opinion on that concept?
I disagree with that it has to be something new. I think the story has to play out and you as we've been saying over many shows, you need the FOMO. If people think that the stock is just going to stay here and they're not buying into the robot and an FSD like version 12 coming out. That's, unfortunately, that's what was communicated in the earnings call. So I think if Elon can cast the vision, explain where they're going, because what they said and what their actions are, and I imagine you guys discussed this before I got here, they're allocating capital and they're spending it, and they are moving in that direction, and they're doing it well, and they have $29 billion in the bank, and there's so many, like, it's a rock solid balance sheet, and so to see them going in that direction, unfortunately, it's going to take people to realize that if you're looking for a quick payday, that's not the story. It's no longer this 2020 run up that you could just put your money here and then the fundamentals don't matter. The reality is this is a company that's going from selling cars and they're moving towards selling energy and then robots and software. So that to me is really the story that has to be told, whether it be in the media or online. So until that point, until people worldwide realize that, and instead of Elon bad and Tesla is a car company, unfortunately, we're going to be here for a little while.
So Larry was talking about Investor Day, and they showed off a lot of the executives. In this earnings call, you had Tom Jew talking. For some reason, he talked about advertising. What did you guys take of that? Is that good news that he was there, right? If he wasn't there, you guys would have all been saying, why wasn't he there? But what did he show off? Did he come off as good? Anybody want to take that?
Yeah, I mean, the advertising thing that he talked about was really, it's my one big disappointment, and I don't want to get off on a rant again about advertising, but it's my one big disappointment. And that Tom Zhu would speak to it. Now, it will, we must recognize that China has led in terms of, advertising, but more importantly, being public in terms of PR and so on and so forth. So perhaps that's the reason why he took the mantle. But, it's just disappointing to me that Elon has such a negative view of what could be a very powerful tool. And it's a tool, that Apple understood they did it incredibly well. and with very little money. And, that type of approach would make a big difference, but I haven't seen the willingness or the understanding of Tesla to do that. And given what they're trying to do, which is, shattering all norms to take two cars that are really at the luxury end and turn them into volume vehicles, it's shattering the norms. They've done it incredibly well. They've executed on it, but they would benefit significantly from taking the market from the very narrow spaces it's in, which is really the cities, the urban areas, and moving into the suburban area, the suburban and even the rural areas, because there's a market that exists that they haven't tapped. And so, to me, it's a big disappointment. It's one of the blind spots that Elon has, and the company is not really breaking him out into that space.
I would even add something, Larry. I'm not sure it was Tom Chu. I'm always publishing these real-time AI scripts when we're doing that, and then they are improved. So this is on a tool called Quarter, and without the E at the end, QUARTR, and they attribute the 2 answers on advertising to Vaibhav Taneja, the CFO, and the way he answered to them was, we're very cost efficient and data and digital campaigns and whatever. You've run businesses, I've run business. In advertising, you have to be bold. You can be educative and bold, but there is a moment you have to step up the game to be seen and to be seen as a leader, right? And as a leader, you can't do micromanagement of keywords and, a little bit more in Japan and now a little bit more in Singapore and now a little bit more in America. That's not how it's done. You need to have a visionary statement out there that could be affordability, or that could be whatever else it is, long time cost. I don't know where they want to go with it, but the way it's done at the moment is micromanagement by a CFO, and micromanagement of digital advertising by a CFO just gives me
Crazy.
a real headache.
Yeah, I disagree with you. I don't think the micromanagement's being done by the CFO. I really don't. I think the micromanagement's being done at the operational, not at the financial level. And that isn't Vaibhav who spoke, by the way. That is Tom Zhu. Just don't believe AI. Guys, anybody who believes AI, they're misleading themselves.
Well, I mean, I think I can actually play it. Let me give a second, because you hear his voice.
Alexandra, I took it as Tom Zhu as well. It sounded like an Asian dialect or accent to me.
Yeah, I don't know what you heard, but it really has clearly an Indian accent. Both of those. I mean, I may be wrong. But
if you want to play it, you need to press present and then upload the file and then play it from there.
Okay. Well, no, sorry, that doesn't work.
Yeah.
But anyway, it didn't feel like Tom Chu. It felt more like an Indian native speaker.
Okay.
The answer was disappointing.
Oh, I'm sorry to interrupt. I have a timing issue on my end. We good?
Mm-hmm. Go.
Okay. The only quick thing I'll say, I'm not an ad expert, definitely kind of a supply chain product expert. The only thing I'll say is you don't understand like the magnitude of the problem you have until you measure it. And, back to what Larry was saying about awareness in urban cities versus, getting out to remote, like we're nowhere near in terms of like, even at a midpoint of penetration of both just generic EV, not to mention Tesla. So how can they measure awareness of their product, the awareness of the product and the price points it's at? There's 4 or 5 people around me in my family where their next vehicle, by the way, my survey rate's 100% of the next 4 or 5 people around me, they want to buy an EV. And when I bring up Tesla, and I talk about Tesla all day, obviously you see me here, and all of them thought they're over 50, 60K. All of them thought they have super long lead times. Absolutely. All of them thought, all these different, every single one of them thought that they were out of their price range. I'm like, well, are you aware of this with the credits? Are you aware of the price points are now here? Or you understand the performance of a Tesla versus, and the point is you can measure awareness. I'm not an ad expert. I don't know what to do with the dollars. I don't know how many dollars to spend, but get on the conference call. You're going to talk about gross margins, talk about other things. What is the awareness of your product? What was it last quarter? What was it 3 quarters ago? And what are you doing to improve the awareness of your product? And I think that would go a long way, because once the awareness is something you can quantifiably measure, well, then you can know you're getting somewhere.
Okay, I want to ask you guys a very fun question, I think. 2 questions, 2-parter, and I'm going to go through the panel. So everybody listen up, okay? So the first question is, okay, we just listened to the earnings call. We know that the institutional investors, they felt that the biggest issue was the no guidance. I want to ask you guys, which was the worst news that you heard at the earnings call yesterday for us retail investors, for you? Like, was it the no guidance? Was it that they're not going to do FSC license? Was it that there's a Dojo is kind of this thing that could go, but it's, not great? And there might be others. And then I want you to answer also, what is the best news? 4680 is not going to be constrained. FSD is going to be now spread wide in a couple of weeks. Tesla bots shipping next year. Cost of goods continue to fall. We're still going to be on track to be the largest company. We have the largest compute, the greatest thing. So let's go through the panel here. We'll start with you, Xander, first. Do you want to start, or who has a good answer for both of these? You guys are thinking still.
No,
I can hear
I'm ready.
Okay.
I'm ready.
Go for it. Ladies first.
I'm
Okay,
ready. Thank you. So for me, the biggest bad thing was that there's no FSD licensing deal in place, and it's actually not that fact but that we learned it by pure coincidence, because the analyst followed up on that. I found that really gave me sort of the Grinch moment, where I thought, oh, come on. I mean, you could have given us that information before. We were still at the July 2020 state, where you are now in early talks, and now there's no early talks, and having to learn it this way was just Grinch. That gave me a really bitter feeling. The best for me was the CapEx guidance of more than 10 billion. I want them to be so lean and mean and efficient as they are, but I want them to put as much money into
negative.
AI and research and
Sorry.
Yeah, that's my best. No, that's my best.
No.
That's my best that it's 10 billion.
It's the negative. They should have done
why
20
is it a
billion.
negative? Oh, come
It's
here,
too
you
little.
go. But you know how stingy he is. One thing Elon is frugal. News. He is over prudent with money, because he wants everybody. You know how long they talked about the pennies of COGS, the 1% of COGS, and the joy it gave them to talk about how much more they will get of suppliers. On and on and on it went. That just shows their mentality. So you can't. I know. There you go. But you can't tell a guy like that, please throw more than 10 billion at chips. You can't. I mean, he should. I agree with you, but I like it's already 10.
All right, fine. Jeff?
I want you to recall the Q3 earnings calls when they were talking about COGS, and they're like, hey, this is like picking pennies up, on a railroad. And then all of a sudden they print 3.5% reduction. So the COG story was the highlight of the earnings call. And also, to me, the transition from gloomy conference call to more neutral conference call, I would say, was also, to me, kind of a highlight. Again, I think the guidance could have been managed differently. I'm not in their shoes. I don't see the data that they see, and I respect them. And I'm just wondering if there was another answer besides no guidance that could have also worked, because this Wall Street has them at about 2.125 million in volume, and they've got some growth in gross margins occurring. So anyway, it's something along the lines of, gross margins, improving, and pricing reductions in line with our COGS program. And, and volume, on the volume side, they can say, look, we're going to be growing faster than most high-tech industries out there. It's just not going to be at the pace that it was the prior year. They said that, but I think I even see a lot of people on Twitter like, oh, they're going to ship less than last year. I'm like, no, that's not the case. It's slower growth. It's not shipping less units. They're going to ship over probably 2 million cars in the year. And that's growing volume in a good thing. So anyway, those are the kind of, to me, best and worst.
For me, the Dojo long shot comment was like a stab in the heart. That I don't understand why that's the long shot. I know that that they have like memory, I guess bandwidth issues in Dojo 1, but I thought that they were just investing in the next iteration, and that's going to be the key to FSD. So little, would love some more diligence on that. And then I think that the 25, making progress. I know we already know that, but the 25K car, that is something that Wall Street can bite into, and they can see it, and that's going to reflect in the earnings. So that to me is the, I could see the finish line of this downturn. And another thing, just a quick comment. I've had several people tell me, oh, it's going to go to 100 and bring that up. And I think it's really important to remember the circumstances around that. And that was margin call spiral, along with selling pressure that was, you could see it coming from a mile away. So I don't think we're in the same scenario, but those are my thoughts on it.
Nice.
Can I make a quick comment on your Dojo comment, Xander?
Yeah, please.
I pulled a clip out from the Cyber Rodeo where Elon got up on stage. I think one of the first things he said was like, when we first started Tesla, I gave us like a less than 10% chance of surviving, and now look at us today, with the factory around us. So he has a perennial history. By the way, I'm not like I don't have the hopium mask on my mouth. I'm like, oh, everything's. He has a history of going for many different home runs across many different areas. It's one of the reasons you may want to invest in his companies, because he really takes these big, huge undertakings. But he says that about almost every undertaking that he takes on. I mean, just that's his history.
Completely agree. And don't forget, they're still hiring for Dojo big time. I've republished last night 30 engineering jobs, all at high level salaries. Palo Alto, Austin, and Fort, whatever it's called, in Colorado, whatever, I don't remember. Anyway, so there are 3 locations now for Dojo. So Fort Collins, sorry about that. And so there's one thing saying it's not going as quick as it does. It's a high risk. Don't count on it. He's been saying that for 4 years. He's consistently saying that. But on the other side, they are heavily recruiting at high level jobs for it.
Well, one quick follow up is, aren't they, to quote Elon, they're betting the company on FSD, right? Mm-hmm. So that's where the disconnect for me is.
And FSD would still work without Dojo. You don't need Dojo for FSD.
Yeah,
Dojo is not foundational to FSD.
Okay. So can we sharpen that point for everyone?
Yeah, I mean, right now the NVIDIA performance we know to be better than Dojo. We know also that Tesla have got a very good supply of NVIDIA H200s. So I think that right now the bulk, if not all, of the training is being done on the H200s. So Dojo is an attempt to improve on the architecture and to break the barrier break several barriers actually, and to use some unique ideas. I spoke a little bit earlier, you weren't on, Xander, about how tough it is when you develop something new. You always go through the cycle of, oh my God, it's never going to work, before it starts working again. And I think they're in that cycle. Dojo is not required for FSD. Dojo is not the platform for FSD at the moment. Right now, the platform is the NVIDIA chips, has been the NVIDIA chips, is planned to be the NVIDIA chips. Dojo would be dessert. That's where they are with Dojo. I think people, when they announced Dojo, people completely went off track and they were inventing, services, training services, blah, blah, blah. They built this whole entire castle in the sky. I was trying to tell everybody, look, it's not going to happen. It's not going to happen now, and it's not going to happen in the next 3 to 5 years. If it
I agree
happens,
with you on the time. Exactly. I agree with you on the timeline, but it's actually Elon. And that's why I pulled out those 14 chapters of when they talked about Dojo, comparing it to a future AWS. So, people weren't just inventing stuff. He gave us very precise points on how he would like to use Dojo in the best case scenario, if it ever materializes.
I'm not sure that he specifically cited Dojo as the sole platform at all. I think it's one thing to have a training platform, but anyway, I mean, yeah, the castle's in the sky. It's part of the business. You have to justify what you're doing, but I don't honestly believe that, and I haven't believed for some time, that Dojo is foundational to what they're doing. I think it's very important to what they're doing. I think that they will ace it, and I think they'll come out of this situation. If I want to talk about what I thought was the best news of yesterday, without doubt, it was the cost of goods sold. We're looking up again. We also learned about the amount of savings. It looks like the savings are going to continue. Very, very important. And the big disappointment to me was that next gen is only going to be available late next year. I was hoping on mid of next year, early to mid of next year, the first production. But maybe they're sandbagging that, because that is an unknown for them as much as it's an unknown for us. So that's my hope about that.
Well, it really, sorry, I'm always jumping in. It really corresponds to that Reuters article, not that I like Reuters, of the day before, saying the suppliers are getting ready for July 2025. That would correspond to, production start at that moment. And I'd actually shared with my Cyberball friends a message I got last year in August from somebody that has ties to Tesla, who told me, called Redwood, it's going to start middle of 2025. So that really seemed to have been the plan now for the last 2 years.
Can I add to that? So there's a couple of things that we know that are extremely helpful, I think. One of the things when you're looking at a project schedule is you want to look for these milestones that can't be BS'd, for better words. And people can BS a number of things. They can make a prototype and roll it down a hill. They can do a bunch of different things. Everybody trying to, let's see the first prototype. That's not a real milestone. Real milestone, if what's in that Reuters article is true, and it kind of aligned with Elon's commentary and some of the answers on the 25K vehicle on the call, if they sent RFQs out to suppliers, RFQs contain a three-dimensional design of a part. It means that there's some level of maturity. It's the initial design. I'm not saying it's the final design. What I'm saying is that kind of that initial design lock, maybe a much, much closer to that initial design lock. I thought to ramp in the middle part of next year that they would need to design lock, in the next couple of months. So if they sent RFQs out, and that means that there's a level of maturity there that's actually measurable and quantifiable and kind of a starting point. And then in terms of ramp doesn't start on one day. There's SOP for general assembly, but then you've got a mechanical supply base that goes ahead of that, and you got an electrical supply base that goes well in advance of that. So you'll hear the 48 volt arc, you'll hear all that. That'll be ramping, months and months earlier. Then you gotta hang on that SOP for general assembly. That's when the factory's starting.
Okay, so I want to answer the question too. And what I find interesting is that each of us actually answered this question differently. And I thought that as retail investors, we'd be much more solidified on this. So I think that the worst thing that happened yesterday was the FSC license. And I know a couple of you said the same thing, right? So the FSC license, because FSD was the big promise, right? So we already knew the auto business was growing, yet it's not going to grow as fast. It's being impacted by macro, and it's not going to grow as fast as 2023. So that's already built in my mind. And what we were all expecting and hoping for, many of us, was FSD. Many people, they talk about their price target of the stock, and a lot of it is FSD. So when they said that there was no licensing, that questioned how it is, despite the fact that they said that they're going to roll out FSD 12 to all of us. The best news was when they said that the bot is going to be shipped. A very good chance it's going to be shipped next year. So this is Glenn saying, bot is the new future. I agree with that. Absolutely agree with that. But they poured cold water on it yesterday. So some people interpret it as cold water. But this is what they said. Optimus is a new product, extremely revolutionary product, has the potential to far exceed the value of everything Tesla combined. They go, we have a good chance of shipping some number of Optimus next year. I took that as a very good sign.
How's
That's a
that cold
positive.
water? How's that cold water?
Exactly.
Yeah.
I don't know. And then he goes, lots of uncertainty, so I can't promise. But he goes, we'll be updating the public with progress every few months. You can see it's advancing quickly. And then he talks about the lab, how amazing this lab is. You wouldn't believe it, and has the potential to be more valuable. I thought that the whole bot conversation was actually positive because for them to say they're going to ship it as a product next year, that's way ahead of what I expected. Way ahead of what I was thinking, and people think I'm a bull in bots.
Wasn't it the CFO that poured cold water, and then Elon reiterated?
that Drew said, the barriers to do something useful.
That's right.
And Elon said it can already do some useful things.
Right.
And he goes, a smart robot that can be capable of doing generalized things is what we're looking for. That's what we're aiming to be. It can already do moderately generalized tasks. Okay. And then he goes, it runs the same computer as it does in the car. We're already building the future.
Yep.
Guys, Tesla bot is the story.
Yeah, I mean, and the amazing thing is not a single analyst has mentioned it.
Well, not a single retail investor in this panel's mentioned it except me. So
I mean, I agree. I mean, but that it just shows you. I mean, I just saw coming across the wire, Bloomberg saying the time has come to dump Tesla stock. I mean, Alexandra is buying and Bloomberg's dumping. I'm going to revisit this in about 14 months, 18 months time with glee.
Weren't you disappointed by Dan Ives? I mean, there are a couple of other analysts or fund managers out there, but he was so emotional the last couple of weeks, and then today everything was bad.
No, he's been very consistent, Dan. Yeah. Very consistent, saying how great the company is. Now, today he was not saying anything different than you or Jeff has been saying, which is the way that they handle the earnings calls, they could have done it better. That's nothing different than what you've been saying, Mama. Somebody called you Mama on the thing that I just...
They do, right? I love it.
I'm interviewing Dan Ives on Monday, so I'm going to ask him. I'm going to tell him what you said. Okay, I'm going to say,
and bring him on the Cyberbulls, so we hash this out.
Yeah. You tell him that he is my hero.
Yeah, he's mine too. So apparently, Alexandra was not happy.
Amazing, and I think what he said was pretty, straightforward. He said, "Look,
straightforward.
This is going to drag the stock down because analysts, he didn't do what the analysts want him to do." And this is not news, guys. We lived this in 2018 when he told the analysts to shut the hell up.
And you're actually right. I think it feels like 2018, 2019 these days. There's really something about it. And I don't mind that because, I wasn't there at the time. I only read a lot about it, but it really feels the same.
There's another corollary.
Nobody is getting the point. This is the opportunity of a lifetime. This current year is going to be, it's going to be the 2018 all over again.
I sent a tweet out, if you go to my timeline, about the relative percent growth in Tesla over the last decade. And there was a low growth period in 2018, 2019. So if you kind of got down on yourself, got down on the stock in 2018, 2019, you would have missed the next couple of years of just, literally doubling in terms of growth of the company. So, nothing goes up in a straight line perfectly at the same rate. That's why I always find these EV adoption conversations to be, funny and uninformed. You really have to give the entire context of how new markets and how things grow. We had years in the smartphone boom where it was just like, is this thing going to continue growing or not? And there was questions, and all of a sudden it's went from 300 million a year to 1.2 or 3 billion, and there's different points and different reasons of inflection points along the way. But if you're driving the best if you're developing the best product from a performance perspective, and you're driving the cost structure down, to increase availability, you're kind of operating on these fundamental axioms that, will in the end play out. There needs to be some patience involved. But yeah, anyway, I just found it interesting that the same kind of 2018 paper also correlated to a low growth time for the company.
Yeah.
All right.
100%.
Okay.
Herbert, I wanted to push back slightly on your comment,
Okay.
regarding the licensing. So I think that, for me, it wasn't that big of a deal, because it doesn't mean that it's not going to happen, right? With FSD 12 dropping, that's what's in my mind. So when it was, I'm not surprised that if they're pulling back on EVs, why would they license, the software now? So I think that, that didn't change my mind. So I just wanted to bring that. That's why.
I actually had a comment too. Sorry, just the only thing is I agree. This work is nonlinear. It's not like building something in hardware.
Right.
And so when it happens, it's going to happen. And again, you have somebody, when that question gets asked to somebody like Elon on the call, I mean, sometimes he kind of gets into these binary modes of how he responds. I'm not trying to put words in his mouth, but these things are very nonlinear. When they happen, they happen.
I don't think this is the right time to license FSD yet. I think the time to license FSD is a little bit further down the road. So I think everybody's being a little bit too forward.
And more expensive.
Larry, that's not what Elon believes. Elon's going out there. If I was an OEM, I'd be calling Tesla now and licensing FSD now.
But Elon's not calling anybody to sell them a license on FSD. Elon's waiting for them to come to him, and they will. And it's going to happen when we get that magic moment when people say, "Oh my God, it's happened," and that's when it's going to happen. And there's plenty of time. The OEMs and their suppliers, because they're not developing anything. The suppliers are developing the stuff. They are so far behind. It's incredible. I mean, Mobileye is the only company that's really even touching base, and they have virtually no users out there. They've got no cars out there. So it's only a matter of time.
I agree with you. And those that come to me and say, yeah, but the Chinese, yes, there are some Chinese now playing with this, having Chinese robotaxis. But it's my firm belief that neither America nor Europe will allow Chinese FSDs on their roads.
And vice versa.
And vice versa. Exactly. And I think that's one of the reasons, by the way, that Tesla doesn't have the license yet. They gave an L3 license to Mercedes and BMW because they actually use a Chinese supplier for it. So it's not because this is sitting in the data center in Europe of Mercedes or BMW. That's not at all how it works. So first, I think the Tesla China license, I mean, if that comes, that'll be a huge surprise to me, and it's not at all in my list of catalysts to come. And the second is, you're completely right, Larry. These OEMs currently have so many other issues. The last problem they have is to jump early on the Tesla licensing deal, because they have to survive, right? They have to make sure, the American ones have to make sure they get enough subsidies from the feds, and the Europeans have to survive in a very competitive market because the Chinese are already in that market. And with BYD building that factory in Hungary, that should be one episode all by itself, Herbert, because the way Hungary, excuse the word, screwed the European Union by actually getting European Union subsidies that they're going to give to BYD to build a factory for Chinese cars that they couldn't import otherwise. I mean, this is a whole story that's absolutely mind-boggling. So anyway, so the Europeans have other issues today than running to Tesla for FSD. They will hate it, but like with charging, they will finish by, well, they have to come up and do it.
I respectfully just disagree on the licensing timing. So I think Tesla's priority right now is to expand inside of Tesla. So to get into China, to get into Europe, I think that's the priority. That's where their resources are going. That's where their dollars are going. But soon after, or very quickly, in order to ship FSD in a competitive vehicle for someone to take a license, they got to work a couple years in advance to package that vehicle, to route to route everything the right way, to get everything going. And then they got to work with Tesla on hardware software integration. That doesn't happen overnight. It doesn't happen in a 1-year cycle. So they need that lead time. So when I say that, first off, I do believe that FSE is going to go wide. Here's my predictions. FSE is going to go wide this year, and there will be a licensed partner, one or more, announced this year by the end of the year. And in order for them to actually ship a product in a couple of years, they got to get started. They don't get started. And it goes back to your points of nobody's even close. No one else is gathering the miles and the data that Tesla has. So what would start right now, it would start as an R&D effort. It would start as a license agreement. It would start as non-recurring engineering funds, but then it would actually grow into a license that's, regular milestone payments, later down the line. But I think the process has to start this year.
What he said.
Love you.
Listen to Jeff.
Guys,
We're just here for the
I just want to tell you, as you know, I'm not a short-term trader, but Tesla volume so far this morning, 170 million.
Yeah, I had some of them.
180. It's 180 now. While we've been.
Oh, wow.
I want
but
to
it's falling.
thank the person selling them to me. Thank you.
Yeah.
Thank you.
That's an amazing volume.
Okay.
Yeah.
First of all, guys,
if I just say one thing about the licensing, there's no doubt it's going to come, but it's only going to come when the proof points are so undeniable, because there's no public auto company that can make that deal without a very strong public sense that the deal is okay, that the technology is okay.
all right. Well, this was a powerful, powerful show. You guys, you just watched brilliance here. Masterclass from people call Jeff Mr. Incredible. Are you okay with that? Mr. Incredible.
I call Larry Mr. Incredible. I love watching all Larry's shows, and I take guidance there.
You got Larry Goldberg. You got the amazing Tesla Boomer Mama. You got the incredible Xander Sky. Thank you guys for joining us. That was a good show. I appreciate you all. I hope you guys enjoyed it. Thanks, everybody. This is Cyber Bulls, and we'll do this once a week. Thanks, everybody.
Great moderating, Herbert. Thank you.
Thank you.